All right, let's see if we can run through this real quick. I know there's a lot of people out there that are concerned about the current price action, with Bitcoin and the crypto market in general. Alts aren't really doing much, and it's warranted. I mean, I've been talking to some people in a group I'm in. Um, they're concerned as well, and understandably so. A lot of people are wanting their altcoins just to keep going up, but we know that Bitcoin and overall the markets in general, whether it's the S&P 500, whatever, uh, they kind of dictate what's going to happen. But even more than that, it's liquidity, right? It's how much money the people that are in power are willing to print to keep this train rolling. So let's just look at a few things, and I want to make it as fast as possible. Maybe I'll throw a couple analogies in there for fun, but so if you jump around on this, you might get confused as I go through it. But one thing I was talking to somebody about today that I haven't really messed with much this cycle is back in 2021. I noticed that the moon cycles, they helped with finding local bottoms and local tops within a plus minus 5 day period. And so what you would see, and especially what we're seeing now is if you go back and look at it, is that, we'll typically pump into, like if we're talking about this new moon right here, January 11th, we'll pump into it. And sometimes it might extend 5 days past it. So it might have topped out, the 16th or something, or it might have topped out the 7th or the 6th or whatever. Yeah, that's what I mean by plus or minus 5 days. And now that we're going into the full moon, it seems like we're dipping into the full moon, which typically happens. And then that would be the local bottom. So anytime between the 20th and the 30th, we would see that next bottom if this is going to play out as it has been. And you've seen a lot of bigger name people pick up on this for this cycle. I never really talk about it because I'm not really into that whole astro side of things. But I will admit that it does seem to work sometimes. So yeah, the other so we got that as far as a schedule item that we can look forward to. And then also the FOMC meets on the 30th, I believe it is. Let me double check that. 13 days to the next meet. Well, 14 days, really. What is that? Let's see, that would be 14 exactly. Oh, okay. So that's actually the 31st. And this is something I wanted to talk about. I'm glad I went ahead and clicked over to this. So this is the next thing you look forward to, just to see what's going to happen with the Fed. Are they going to cut rates? Are they going to keep, pausing and let it plateau, which is good for us. Just in general, for anybody not aware, you would rather see them continue to pause rates instead of seeing them cut. And I know you would automatically think, well, cutting is good for the economy, right? And yeah, it is overall. But sometimes whenever you see that first or second rate cut, it can stay bullish for a little bit longer. But usually by that second one, it will start to affect the economy in a way that things will start to break. They're kind of letting things unravel. They fake a lot of these numbers as far as the CPI and stuff like that to make it look good for the presidential candidate or, whoever they're using as a scapegoat. And so what we're looking at is possibly, I mean, you can look at the site here and all you have to do is go to cmegroup.com. This is for interest rates, the CME, Fed Watch. And what you can look at here is if we look at January, which that's the 31st of January meeting, this 525 to 550 basis points is what we are currently. And I don't know who votes on this or whatever, how this number is derived. But basically what it's saying is it's almost a guarantee that they're going to continue to pause for this month. And that's good for us. Personally, that's why I'm not seeing a big dip in price. I think it's good to have some money on the side just in case there's a big dip, but I'm also not going to risk missing out on my spot bags in case they do go up like Cubic and AIPG. I mean, I feel like they've been consolidating for a while. So could they go down some more? Sure, they could. I mean, anything's possible. But until I see that first rate cut, I'm not as concerned about the market because when they start cutting rates, that's when things break. And we know that inflation's real. I mean, we can see it when we go to the grocery store. So it's not like for us it isn't real. I mean, it definitely is for us, but they want to make it look like they're the ones not breaking, not printing a bunch of money, which they have been forever. I think since what, 95. Uh, the the money printer's been turned on even more heavily. So anyway, that's what we're looking at on January. It looks like it's going to be paused. Currently, this has come down a lot, actually. A lot of people were thinking at one time, I think it was up to like 60 to 70% at one time, where they were saying it looks like we're going to get a rate cut starting in March. And now it's looking like more people are leaning towards it being paused again. So, if this number starts climbing dramatically, then this is really good for us. It means that we're going to continue to be paused. And if this was to happen, by the way, in my mind, I would expect that we wouldn't see a big dip until the middle of the year. And the reason why I say that is because it generally happens where people go on vacation. There's not as many traders on the floor of the stock exchange, that sort of thing. And just in general, people are not really worried about the market. They're out doing their own thing, enjoying life. So, if we continue to see this thing climb where people expect, like if it's over 50 or 60% by the time March rolls around, then there's a pretty good chance we're just going to keep pausing for a little bit longer. And that would mean that May would be the point. I mean, you can already see here. Let's see, what is that? Yeah, the current is 525 to 550. So you can see the percentage is way down for May. So currently, looking forward, you've got more people expecting a rate cut because you've got two different values here. What would that be? No, this number's actually wrong, I think, isn't it? Oh, that's all okay. That's only 1% thinking that. You got 40%, you got 47% thinking there's going to be a rate cut of some sort. One's a very drastic rate cut and one's not. So as you get closer to summer, I think you're going to see people get more aggressive with them expecting a rate cut, basically, because just in general, that's what happens during the summer. Markets do tend to crash. Okay, so these are the Bitcoin halving dates. And the reason why I brought this up, let me bring Bitcoin over here. So if we were to look at, what do I want to look at? July 9th, 2016, which I think, let me move this a little bit. So it's right in there. That's July 2016. Notice how I was showing this in a previous Twitter post, I believe it was, or maybe I talked about it in a video. Notice how it's kind of making an M here. And I think that's probably what's happening here as well. Typically in a 4-year cycle, you do get that 30 to 40% correction. But notice how this one happened in the summer. Of course, it did keep going down. It did find a top in, what is that, June? And I'm not saying this timing is going to line up exactly, but we could push up some more first. Let me just see where did we start here? September, August, September. Started this one in December. Anyway, what I was really wanting to focus on here was the structure of this pattern. A lot of you know that I look at patterns a lot. And I do believe that something like this could take place. I realize that we're way extended. I mean, if you look over here at the Bitcoin chart, this was very healthy coming up here from the bottom where we retested a lot of our breakouts and it was real slow and methodical. And currently we're hitting a lot of resistance here. So this is not a good candlestick, obviously. Shooting star pushed way up and then a bunch of sellers stepped in right here at this level. And what we're looking at currently, there is, I'm not going to bring up the charts for this, but between 38.5 and 40K, there's a lot of areas that they could liquidate people, liquidate these longs down here. They've already gone up and got the shorts. There's billions and billions of dollars of shorts that got liquidated that we heard about over the last month or so. And so now they could come down and get the longs as well. And I just made a note here, market makers will seek liquidity volume, and that's what they're looking for. They want to find where most of the volume took place, and they can see this in real time. It's not hard for them. They've got all the tools they need for that. And then there's another zone. I don't know exactly what this looks like down here. I'd have to look at it again, but I know it's around 35K. So you've got a lot of long stop losses and entries that were made right in here, and then a bunch that were made right in here. And obviously, I mean, we could come down to this line too. I'm not saying we can't, but what I would say is since there's a lot of liquidity in these two zones, I would expect we'd get a bounce, here if we come down to here, and then maybe we get a lower high or something. Or, we could go up first and then come back down to these later. I don't know what it's going to look like exactly. Could do something like this. I mean, there's two scenarios basically, and there always should be. Come back into this zone where it wicked the first time, and then it comes back down, slowly works its way down, bounces back up, and then comes back down again. I mean, if the 4-year cycle is going to keep playing out, it would look something similar to this. Doesn't mean we have to go up first. It could come down first. But this is the reason why personally, and it's not financial advice, that I am keeping some money on the side just in case something like this plays out. I mean, there is other thoughts out there that maybe we do a left translated cycle and we go up and we leave all these behind, and sure, anything's possible. And I will get into the ETF here in a second, but what I would look for is areas of validation and invalidation to know if these things are actually going to take place or not. And I would say currently, if I just take this line and put it here at the top of this wick, and there's a lot of resistance here as well. If I take another box up here, or I'll just move this one. I mean, at minimum, we have to get over 50K. There's a range right in here somewhere that if I was to see a daily close up above this level, and even if it went sideways for a little bit, as long as we didn't get another daily close below, this is the other ideas that I'm talking about. I'm not saying that I hold this idea. I stick to the 4-year cycle until it's disproven. But if we were to get something like this, that would be very bullish. And if this happened before, some people say it has to happen before November to be left translated, but I think it has to happen before the halving to be left translated. So basically, we've never had a break of all-time high before either of those things, before November. The presidential, which really I should bring up the presidential chart, but maybe I'll get into that in a second. So if you get a cross above the 69K barrier prior to the halving or prior to November, either one, then that's what we call left translated, and you're going to get a much sharper correction out of that at some point. I mean, there's a lot of targets it could hit. 100,000 is the kind of like the mental barrier that has to be breached at some point. So even if we were to get extremely bullish from here, which I don't think we will, right off the bat, I do believe in the 4-year cycle still. And I think it's going to, work its way up slowly. Maybe it'll come down first and retest. But even if we were to get this real bullish event, it's not going to cross 100K in this case, I don't think, just because a lot of people are going to start selling at that point. It's a whole number. It's a big whole number, 6 figures, and you get a big correction from there. It may not even make it up to there. There's some people think, you'd only see 75K, 85K, somewhere in there, maybe 95K. But again, this is a small minority that believes something like this could happen. And I believe that they're basing it on kind of like one final blow off top move because of all this money printing that's been taking place. And, once that happens, then all the chickens come home to roost, and the feds or whoever use some kind of scapegoat, whether it's a presidential candidate or somebody. That's why the presidential cycles happen, by the way, is so that they can completely reset people's memory of the previous president, whatever that person did that they didn't like. Now they get a new president, everything's fresh. They forget the other thing because of all these new promises that are happening. And so that's kind of the psychology there. And just understand that this is all psychology. They're using your brain against you because human emotion is a very powerful thing. And Um, they know that. So that's why there is news cycles. That's where there's narrative events like that, so that you sell the bottom and you buy the top. I mean, it's as simple as that. So anyway, that's that idea. And then I'm just talking about extremes here. So that's one extreme to the top. And then there's one extreme to the bottom that I think blockchain backer's been talking about. Um, I mean, I wish I would have looked at what he said first, but I think somebody was talking about, I don't know what the path looks like, but basically he's saying something like this, maybe. You can correct me on that. I don't really watch him, but there are some people that are saying we're going down to 10K first before another bull run, basically. Now, I'll call these markup phases and markdown phases. I mean, that's all they are. They happen on smaller time frames, longer time frames, everything. So this I don't see happening either, but of course, anything's possible. And I think without really studying what these people are talking about, like BCB, I think really the reason they might be believing this could happen is because of the number one, we're reaching, resistance areas based on Fibonacci, but also the state of the economy, the world economy, the US economy, whatever, which one you want to look at. The reason most people look at the US dollar is because it kind of, um, it kind of has control over everything currently. It seems like that power is shifting, but still, when the US dollar goes up, things tend to go down. Other things tend to go down, and crypto is no exception. We can see that since the DXY in early January has started to come back up, and really it was this moment here once it came out of this consolidation around the 11th, I think. Yeah, it's been pushing back up, but currently it's hitting some resistance as well. So, who knows? We may see it roll over again. Definitely we want to see that. And some people think, of course, that it can break back below this $100 mark, but that's probably going to be an area where it bounces, if I had to guess, just because um, it's a pretty strong support area. If you look back here. Okay. So let's see what else what was I talking about here? Oh yeah. So this idea here of us having a big crash down. Um, and again, I hope I'm not misrepresenting what BCB is saying. I just don't watch him. And this is my own idea. I believe that these two extremes, the one to the upside, the one to the downside, typically you take the median, you throw those out and you take an average of those, and that's usually what you're going to get. These are very extreme examples that I'm seeing from other people. And if you look here, yeah, if we just take the Fibonacci pull, and I was actually talking about this, or was it? Yeah, I was talking about this back on November 27th of last year, how I felt like we could have another push up into 47K to 52K. And I'm not saying this to, for ego or anything. If I ever seem like I have an ego, you tell me in the comments, because that's not how I want to come across. I'm just a guy that, has experienced some things, and I'm trying to help people out, and that's it. I don't care about any of the rest of it. So yeah, you got a wick. Um, this would be considered, that 47 to 52K zone. Of course, I didn't want to see it reject there. I would prefer to see it going up because that's good for all of us. But I mean, these are healthy pullbacks that have to happen if you're going to continue that 4-year cycle. So yeah, we need to hold this 40K zone. Obviously, if we do drop down, we need to hold that 35K area. When I talk about 40K, I consider it more like a 38.5 to a 40K area that needs to hold. But if, getting back to this fib idea, we almost touched the 786. And if you go back to this 2017 bull run, it did sort of the same thing. Actually, this one touched the 786 exactly. So that's kind of why I was giving it a zone, that 47 to 52K area. Because it would have, what would that be? Actually, that would have been 50K if it came up here. And it still could, but we'll just have to see. I mean, I don't know what the price action is going to do, and you don't either. I mean, the person that might be considered the best trader in crypto doesn't even know what's going to happen. Only the insiders do, and there's very few of those. Yeah, so you got a rejection of 786 there, and you got an approximate what, 30 to 40% dip on it. But for the most part, aside from that wick, it came back down and it sat right down on this golden pocket. So if we take that, did I pull this correctly? Yeah, that's right. Let me just see what this. Well, they didn't hit the 786 exactly, so it could come down lower. But that would only be a 20% dip if it was to come down a little bit more into this golden pocket. Probably going to get at least a small bounce out of the golden pocket at minimum. But that is right around that 38.5 to 40K zone. And that's why I kind of selected that as the next, bounce area somewhere in here. But if it doesn't hold there, then based on fibs anyway, you'd be looking at a 32K to 33K zone, or coming all the way down to what, 27.5K. And that would completely retrace all of this imbalance where, you never came back and retested this breakout here. So just know that that can definitely happen. But what you can't see is a daily close below this level. So if this was to come all the way down and maybe make a shoulder here, and maybe this is what BCB is talking about, then you definitely be coming down to here somewhere. And I wouldn't expect that it would come out under here, but I mean, you never know. Some people have been calling this a bear market rally, that the bear market wasn't over with yet. But from a 4-year cycle timing standpoint, it had been enough time. So we'll see. I mean, ultimately, the longer this plays out, the longer it drags out, the better it is for the higher price. I do absolutely believe that it would get over 100K if the 4-year cycle kept going. In fact, I think I had like maybe 197,000 target, possibly something like that. But it's all speculation. None of us really know. One thing I don't like currently from this price action, maybe on a daily chart, is it? Well, I mean, number one, I don't like that it's just sitting down here and doing nothing. We would like to see a move back over that 44K area, but there's a lot of wicks up here to the top side, so this is probably not going to be broken anytime soon, I wouldn't think. So those of you that are concerned with more downside, it can definitely happen. I mean, just understand that we just don't know. There's no way for any of us to know. The best you can do, and currently, if you just look at this, if I was to extend this a little bit more, this was a trend line that I had drawn a long time ago. I don't remember what I did it off of, though. Maybe it was the weekly or the 3-day. Anyway, it's roughly correct still. I'm just using the wicks for the most part. But you can see right there, this is just an upward channel. And as long as it holds this upward channel, then we're bullish, even though the short-term time frame doesn't look good. And this was a fully engulfing candle on the 3-day chart. So, definitely not a good look. You don't want to see that. But, we'll just have to look at it week to week. That's the best we can do. Okay, so if we look at Nansen, a lot of money has been going to stable coins over the last 7 days, obviously. A lot of your smart money has been taking profits, or putting some money on the side just in case there's a bigger dip that they could take advantage of. And then if we look at consensus layer, has been doing real well, which this is actually, this is cubic, I think it might be considered a consensus layer. So I'm hoping that it because this is bullish currently as far as altcoins go, I'm hoping we see some bullishness out of cubic soon. But overall, AI has been doing really well, and cubic considered AI also. So I would say just keep writing that narrative, and gaming, stuff like that. Eventually it will do well. What else was I going to show you? Oh yeah, here it is right here. I was talking about this at one point where the balance of stable coins had really started to rise, and this is just smart money taking profit as price goes up. So just understand, if you're new to the markets, smart money will take money or take profits to the side and leave them there as price appreciates. They don't take profits all at once at the very top. There's not enough liquidity to do that. So if you go back here to the Bitcoin chart, they're going to be taking profits. And I know it seems weird because normally we would try to wait till the very top to take our profits, but we really shouldn't do it that way if we want to be like the smart money. And I made a post about that recently about how you just go ahead and set your goals for whatever altcoin you're holding, and if you think it could hit 100x, then maybe you take some profit at 10x, maybe you take some at 25x, 50x, 100x. However you want to set that up, do it the way that seems right to you. But you'll, as these breakouts happen and this consolidation begins, maybe smart money sees some weakness here and they take some profit and then they let it run a little bit. And if they see some more weakness, maybe at this red candle, they'll take some profit. They've got their own goals set aside ahead of time and they stick to those rules. So, try to set something up for yourself like that. But anyway, temporarily, back on the, do I have this right? Let's see, stable coin. Make sure I'm telling you this right. So this is stablecoin balances, inflow and outflow. So this is the balance of stablecoins on exchanges. And it continues to rise overall. And back here it was falling. That meant people were deploying stablecoins to buy things. And now as things are going up, people are taking profits. I believe I have that right. But temporarily it did dip in certain areas, and that's where people were buying dips and that sort of thing. Or maybe altcoins, they found some alts were really undervalued. And by the way, that's a really good way to consider. That's why some people use volume profiles, which is this tool right here. Sometimes they'll just drag this volume profile and say, okay, let me go to the daily actually. And I'll say, okay, here's the value range high, here's the value range low, these blue lines. Here's where most of the volume took place on the daily chart over this period of time. And so they'll, if they see it coming up to here, maybe they'll take some profits and wait to buy back here. I think, let's see if I have this right. Oh yeah, usually that's set to 70. I had that wrong. Yeah, so maybe they'll sell up here where it's considered a premium. You're buying it at a premium, or you're buying it at a big discount down here. And you can see if you were to do that, if you were to stick to those rules where you bought down here and you sold up here at the value high, bought at the value low, you could have made a lot of money, with leverage trading or whatever. And of course, many people got really bullish here because it broke above the value area high, but now it's back below it. So currently it's just working in this range. It's not guaranteed that it's going to fall out of this range or go above it. We just, maybe it goes sideways for a while. We'll just have to see what happens. I mean, again, the rate cut is what I'm looking for. I want to see that first rate cut, and then that gives me my first warning that the economy could be breaking down. Sometimes these things plateau for a while. And this is one thing I wanted to get into real quick. Oh yeah, so if we're looking at the SPX, so the first rate cut I'm going to look at is on it's roughly December 2000, and after the first or second rate cut, after the plateau, that's when things started to break down. Of course, we didn't have Bitcoin here. I think the first one, yeah, these two, of course, we can look at for Bitcoin, but Bitcoin didn't exist back here in the 2000s. It's 2007. It just started in 2008, right around here somewhere. So if we look at this versus the federal funds rate, and what I'm looking at is 2000, you can see right here it started to break down. These first one or two rate cuts, that's when it started breaking down right there. And then we'll look at October 2007. Yeah, right here. That's right in here, September, October, first couple of rate cuts. We broke down. Here is, well, this is basically the March crash. I mean, you could have seen this coming if you would have been watching the federal funds rate. But it kind of did a weird thing. The first two cuts were in August, let's see, September, October, and then it plateaued. It did a really small plateau here in January, March, or January, February, and then it just crashed in March, of course. But I've never seen it do anything like that, really. I guess here it kind of did it, but it had already started breaking down here in 2007. So that's why we got that big crash right here, was because the federal rate cuts were taking place at that time. But of course, that's looking back in hindsight, and really easy to see something like that. Nobody saw it at the time, or not many did. So here is let's see, this would have been around that November Bitcoin top. A little bit after that was when rates started climbing. And I just wanted to make this point because when rates start climbing or they start falling, it seems like that's an event that causes prices to crash. When things are really settled, like here, you could call that a plateau. It's down here at 0% rate. This, you can consider that a plateau as well. Here's a plateau. Here's a plateau. So really, we haven't plateaued necessarily. I mean, we are paused for a couple of months here, but I wouldn't say there's a significant plateau here just yet. And it doesn't matter. I mean, the plateau doesn't have to flatten out. I'm just looking for that first rate cut. That's all I care about. That's my warning signal. So just keep that in mind. It's worked that way every time, so I have no reason to think it won't work that way again. Here is ETH BTC. I just wanted to point out that this is a very similar. See how this kind of does a head and shoulders coming down here? That's kind of what this is. Then it breaks all the way down, and it does this little W right here, which I guess you could encompass all of this together with the anger and depression here. And then you got the same thing happening here. It's kind of a head and shoulders coming down, crash. Here's the W. And I had plotted this out thinking that ETH BTC might just go sideways or a little bit down from here. And the reason why this is significant is that we know that ETH is sort of the leader of the altcoins, where Bitcoin kind of leads everything in the crypto space, or maybe we'll just say it leads ETH for the most part. Well, ETH does the same thing with all the other altcoins, and you're still going to get some pumps and dumps out of random meme coins or whatever. Even if Bitcoin goes down, it just happens, but it's a very small select few that happens for. So I'm kind of expecting something like this, which just means Bitcoin could come down, and then it might go sideways for a little bit, and then we get some relief for a while. And the same things happen for DXY. They're just kind of going sideways. But hopefully we're going to get some kind of altcoin move out of this. That's what I'm hoping for. But we also have to look at the reality of the situation. And as far as the RSI goes here on the weekly, if we see the RSI come back down to retest this breakout and get back below the 50, which currently it's above the 50, then that would be bad news. I mean, it's definitely going to bring alts down. So that's another thing you can watch right there. I'm just giving you some things that you can watch for yourself if you want. Feel free to message me on Twitter too, and I'll take a look at it for you. For those that don't know, this is my Twitter here. Okay, we already talked about DXY there, so just looking for it to turn back over here. Maybe we'll get some kind of relief, see some altcoins move. I mean, obviously, y'all have heard me talk about Cubic probably more than you want me to. Let's see. Trying to bring up Cubic here. All right, there it is. So you can see, I mean, well, it's kind of trying to get bullish again, but I had talked about how it's just kind of playing in this range. I posted it on Twitter how there's a range right in here. Where did I put that? Yeah, it's somewhere in there. And that's what it's been doing. It's just kind of been bouncing in between this. And I don't like that it's staying down here for so long, but this is just, I mean, it's something we have to deal with. I mean, it's not like we can make the price do what we want it to do. We either buy when it's boring and hope that it goes up and gives us a lot of profits, and then maybe just keep some money on the side in case it dips further. But so far, there's no reason to believe it's going to come down more until it breaks below this, I don't know, I'd say 2,900 area. So you'd have to see a 4-hour candle close below that 2,900 area to really feel like it's going to do that. But I don't really want to get into the altcoins here. I just wanted to talk about the one that I usually talk about the most. Here is iShares Bitcoin Trust, which is the Bitcoin trust that most people are watching. I don't know if there's other ETF ones we can look at, but this is the BlackRock one, from what I understand. And currently, there's not a whole lot to look at because, I can't look at things like Market Cipher to look at money flow or anything like that because this thing just started back on the 11th. And usually these things are a sell the news event. I mean, that's just how it happens. Back in November 2021, when the Coinbase IPO happened, we've talked about that before, how that was a sell the news event. So just remember, if you get a super bullish event like this, just remember in the future, price could come down first before it rebounds. So it might be a good buying opportunity for you. It looks like it's trying to establish a base of support here, but we don't really have any information yet on that. It does have to get above this little maybe $25 area. And then to get even more bullish, it would have to get above, I don't know, 2650, I'd say, or there's kind of a zone there, 2650 to 27. But, very young charts. So there's not a whole lot we can take from it except that it's oversold according to RSI so far on the hourly. So who knows? Maybe we'll see some, there is a little bit of a bullish divergence there where this is coming down, this is coming up. Maybe we'll see some relief, at least temporarily. I think that's about all I wanted to talk about. What else can we say? I guess we could, well, I was going to say we could look at like total two, maybe. Oh, Bitcoin dominance. I wanted to look at that. Yeah, so total two still has plenty of room to get up here to this order block. It's only about halfway there. But the question is, does it come down and retest this breakout first? Which is, I don't know, somewhere in here. It already retested it once. So just understand that that's possible. And then if we look at dominance, I mean, dominance looks bearish to me, but maybe this is just sideways action for it. We don't know. I mean, it has been moving up a lot too. I had talked about previously how I expected. I mean, this looks a lot like total two, doesn't it? I talked previously about how, maybe it comes down to retest. And both things can happen at the same time, by the way. Maybe you get Bitcoin is dipping because, whatever, it's just dipping because it's dipping. Maybe DXY is going up and then it comes down to here, but also total two comes down to here at the same time. And that happens a lot because, Bitcoin is bearish at that time, which makes altcoins bearish. So really, you got to have a couple things happen. You've got to have ETH BTC be bullish. You've got to have Bitcoin maybe going sideways or maybe a little bit up. What else do you need? You need DXY coming down or at the very least going sideways. So that's why it's hard for altcoins to make a move. That's why most of the time things are just going sideways or maybe down even. It's very rare that things are actually bullish, and that's just how it goes. But when we catch those bullish moves, we can make a lot of money. So it's worth it, obviously. We just got to be patient. And one of these days, I know I've promised it, one of these days I want to get back into this Nansen, and maybe it'll be this week. I want to get into this Nansen thing and show you how I can help you find or show you how to do it for yourself, really, how to find new tokens, ones that have been, made in the last 382 days, looking at smart money inflow coming into them, find early movers, that sort of thing. And then maybe jump into the wallet of some of these smart money people And here's kind of a preview of it if you want to study any of these coins. And that's not much smart money coming into this one, but there are a few here where smart money's been coming in over the last 24 hours. And you can move it to like a 7-day, 30-day, and just see which ones are the most bullish. And you can even take these, take the days here and push it down to 14 and just see, try to find very new tokens, ones that have shown up in the last 2 weeks. So, you can move any of this around. I don't know why it's taking so long to load here. There it goes. So here's your smart money inflow. Here's one called XD, CTO, X Alpha, Sona, PCH, Bark. I mean, anything under like 5,000, I wouldn't really worry about. What's this one? Is that Deep South? I think Braver mentioned that one. If that's, oh, here's another one. I've been seeing more and more about this one called Type. Looks like it dipped. Might be a good time to buy that one too. So anyway, that's all I really wanted to get into is to ease some nerves maybe so people can understand more about how to determine whether things are bullish, bearish, what to think about over the next 6 months, what could happen. It does seem like people are still selling, money's going into currency, going into stable coins. So until this reverses, we're not going to see a reversal in price. I think the money printer is mostly what moves price, but you do get a lot of retail step in too, and that'll kind of find support areas as well. So currently not really seeing anything that would tell me things are going to reverse back to the upside, but we'll keep watching these areas. And if I see anything, I'll let you know. Okay, y'all have a good one.